Good day, and welcome to Currencies Direct Weekly Podcast for Monday, the 15th of March. Yet another volatile week for the Rand has ended, with the currency losing and then gaining more than 3%, all in the space of 5 days. This has so far been the trend of 2021, with the Rand remaining resilient, just like the fynbos, to external factors. The local unit has been able to limit losses against the USD, with its performance ranking in the top half of the EM currency basket. High commodity prices and attractive yields have helped the Rand in this regard, diverting the focus away from SA's glaring fiscal risks. Risks which are becoming more prevalent, following calls for a basic income grant by the Minister for Social Development, Lindiwe Zulu. The grant is proposed to replace the COVID-19 Social Relief Grant, which is expected to end at the end of April. The calls come despite fiscal pressures, which National Treasury predicting debt to GDP will peak at 88.9% in fiscal year 2025-26. However, many are of the opinion that government could exceed this target. Staying in SA, fourth quarter GDP data released last week showed the country's economy grew by 6.35% in the final quarter. Despite the strong figure, the reality was that the country's GDP contracted by a whopping 7% in 2021. The data had little impact on the local unit, which was more so playing passenger to global events. On the COVID-19 front, the Rainbow Nation received its third batch of Johnson & Johnson vaccines over the weekend, with 3 more batches expected this week. This brings the total number of doses received to 200,000 against the agreement of 11 million. So far, the country has agreements in place for 43 million doses, enough to vaccine 66% of the nation. Offshore, as investors start to bet on a faster economic recovery, market attention will firmly be on the US this week. After the $1.9 trillion stimulus package was signed into law by President Joe Biden, all eyes will now turn to the US Fed's monetary policy meeting. With 5 of the 17 members predicting interest rates to increase and return to normalization as early as the end of 2023. The bank's economic outlook and interest rate path will be the key driver for market movements this week. That's it for this week's edition. If you'd like to chat about any of your currency requirements, please get in touch with us on 021 418 0105 for Currencies Direct Weekly Podcast. My name is Justin Ludovic.